New home prices have been announced, but will buyers really be interested, or have developers misjudged the timing? As over 520 flats hit the market, we're about to find out. Hi, I'm Bobo and welcome back to our weekly recap of Hong Kong real estate. Today we'll be discussing three things. First, the new projects launching this week. Next, we'll check out Beacon Peak, a new development in Beacon Hill, where the developer is confident it will set a new record for price per square foot in Kowloon. Finally, we'll look at a residential project on Hong Kong Island that has seen its resale prices drop 45% over 13 years amid ongoing market uncertainty. Starting off with the Lunar New Year just 2 weeks away, a season traditionally slow for the property market, developers are speeding up project launches, eager to see if the long-dormant market can stage a comeback. This week, over 520 new flats will be launched for sale. Leading the charge is Grand Seasons in Lohas Park, which released 138 units on Wednesday. Phase 4A of La Montagne, atop the Wong MTR station, will offer 65 units starting today, following a 20% price reduction. Meanwhile, the biggest focus this weekend will be Gold Coast Bay's second phase, The Reserve, in Tuen Mun. On Saturday, the development will release 281 units in its first round of sales, encompassing all units from 3 price lists. The discounted prices for these units range from 2.422 million to 7.336 million Hong Kong dollars. The discounted price per square foot falls between around 7,900 Hong Kong dollars and 12,000 Hong Kong dollars, with an average of about 10,064 Hong Kong dollars per square foot. Around 40% of the units have discounted prices below 3 million Hong Kong dollars. As for the 65 additional units released on Tuesday, their prices range from 2.84 million Hong Kong dollars to 7.33 million dollars after discounts, with prices per square foot between around 9,100 and 12,000 Hong Kong dollars. The developer has stated that the pricing for individual units has been adjusted based on factors such as floor level, view, and location. For example, Unit E on the 17th floor of Block 2 is priced at 5.44 million Hong Kong dollars, which is about 3% higher than Unit E on the 16th floor from the previous price list, which was priced at 5.28 million Hong Kong dollars. Even when excluding floor level differences, there is a slight price increase. Next, the first phase of Beacon Peak, a luxury project developed by Shimao and located in Beacon Hill, will release 13 units for tenders starting this Saturday. These units range from around 1,200 to 1,700 square feet in size and feature 3 and 4 bedroom layouts, both with 2 en-suites. The first phase of the project includes 332 units, mainly focusing on larger apartments. Units range from around 700 to 3,100 square feet in size, and the development is now complete. Due to its elevated location, most units are expected to enjoy open, panoramic views of lush greenery. South-facing units overlook Dynasty Heights and the Shek Kip Mei area. The developer previously expressed confidence that the project could set a new record for luxury apartment prices per square foot in Kowloon. However, home prices in nearby areas show significant variation. Just a 5-minute drive away are Montrouge and Montvera, ultra-luxury developments valued at over 100 million Hong Kong dollars each. These are currently among the most expensive luxury properties in Kowloon. In 2019, a unit at Montrouge featuring both a terrace and a rooftop surpassed 100,000 Hong Kong dollars per square foot. Recently, however, transaction prices for units in both estates range between 40,000 and 50,000 Hong Kong dollars per square foot. In the secondary market, prices are even lower. For example, at Dynasty Heights, located right next to Beacon Peak and with a building age of about 27 years, recent transactions have been between 14,000 and 17,000 Hong Kong dollars per square foot. Whether Beacon Peak can break Kowloon's price record will largely depend on whether the market conditions over the next year can sustain such high prices. Meanwhile, the property market has been hit hard by a number of uncertainties, leading to steep losses even in typically high-value neighborhoods. For example, in the urban areas of Hong Kong Island, several units purchased as pre-sales in 2012 have recently sold at losses exceeding 40%. Take Park Haven in Causeway Bay as an example. A high-floor Unit C measuring 429 square feet with a 1-bedroom layout was sold for 7.38 million Hong Kong dollars, or about 17,200 Hong Kong dollars per square foot. The unit was purchased 13 years ago for $13.51 million at 31,000 Hong Kong dollars per square foot. This indicates a paper loss of 6.11 million Hong Kong dollars, a 45% depreciation. In fact, the entire building has has seen similar losses. Since June of last year, there have been 5 transactions at Park Haven, all involving units purchased as pre-sales in 2012. Each of these sales incurred losses of over 40%, with the average price per square foot now matching the latest case at 17,000 Hong Kong dollars. Finally, another recent transaction at the semi-new development Wetland Seasons Park in Tin Shui Wai saw prices dip below 10,000 Hong Kong dollars per square foot. A low-floor unit A1 in Block 20 of Phase 1, measuring 636 square feet with a 3-bedroom layout, was sold for 6.1 million Hong Kong dollars, or around 9,600 Hong Kong dollars per square foot. The original owner purchased the unit firsthand in January of 2020 for 7.19 million Hong Kong dollars. After holding it for 5 years, they incurred a paper loss of 1.099 million dollars. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.